This is Matthew Cratter from Bitcoin University, and today I wanted to talk about Bitcoin price manipulation, supposedly Bitcoin price suppression that took place in the last days of FTX. We're seeing a lot of these headlines, breaking news, Caroline Ellison and SBF conspired to keep Bitcoin under 20K. The question is why and for whom? From Watcher Guru, just in ex-girlfriend Caroline Ellison and Sam Bankman-Fried conspired to keep Bitcoin under 20K by selling customer Bitcoin. And the headlines go on and on. As we're going to see, this is very misleading. It's all taken from a single reference to the court transcript that's been published by Inner City Press or been tweeted by Inner City Press. And it goes like this. The prosecuting attorney asks Caroline Ellison, "What are these?" She says, "They're notes from a conversation with Sam. I wrote," and then she quotes what she wrote, "keep selling BTC if it's over 20K. So let's look at the context for this to see if we can learn what's actually going on. This dialogue begins a little bit earlier in the day, the prosecuting attorney asking, how did the downturn in the cryptocurrency markets impact Alameda's loans? Alameda was Sam Bankman-Fried's hedge fund that was working very closely with his exchange, FTX. But how did this downturn affect the hedge fund and the loans they had made? They had taken out. Caroline Ellison responds, lenders were recalling the loans. So basically the telephone's ringing off the hook, and people who have loaned cryptocurrencies and Bitcoin and fiat to Alameda are trying to claw back their money in the wake of the collapse of Three Arrows Capital and all of the Terra Luna and all of the dominoes that fell after that. The prosecutor asks, was Alameda required to repay? Caroline says, yes, they were open-ended loans. How did you learn about it? Slack and Telegram. Next frame, prosecuting attorney, please read this. What is a USD return? Return of our US dollar loans to this cryptocurrency address. What is an OT loan? An open term loan, like we saw in that previous tweet. Genesis wanted 400 million back. This number seems to vary in the court transcript, but it's something like 400 or 500 million dollars that Genesis wants back from Alameda. Caroline says, I was very stressed out. We would have to take it from FTX. And I don't know what kind of person, that's the first thing that occurs to them when you have a loan you need to pay back that you need to steal from customer funds. But these are the kind of people we were dealing with. Genesis, of course, is a subsidiary of Digital Currency Group that's run into a lot of problems. Digital Currency Group is also the parent of Grayscale. So this is a very tangled web indeed. Yesterday, I retweeted a tweet saying that Genesis had just halted all withdrawals. This, I probably should not have retweeted it, and I've untweeted it at this point simply because there's been no follow-up to this. But Genesis filed for bankruptcy late last year or early this year, if I seem to remember. If you're enjoying this video so far, please hit that subscribe button. That really helps out the channel. Hit the like button, leave a comment, question for a future topic, and also share this video if you'd like to help to support the channel. So the transcript goes on. Prosecutor, where would the money Alameda would take from FTX come from? Ellison says, Caroline says customers. And then the prosecutor asks about her mental state. She was very worried about it, but of course she committed the crime anyway. Prosecutor, how much US dollars had customers' deposits versus how much was available to them on FTX? So customers, it turns out, according to Caroline, had deposited $13 billion of their own money, but Alameda had been siphoning it off. Only $3 billion were available to them on FTX. What had happened to the other $10 billion? It had been borrowed by Alameda. So these are two separate companies basically treating themselves as one and helping themselves to the Halloween candy bar, which was customers' money. Ellison, Alameda by September 2022 was borrowing $13 billion from FTX customers. Prosecuting attorney, how did it go up? We used it to repay loans and as collateral for other investments. So this had been going on for a few months. And it turns out by the time they were completely done, well, before I talk about that, let's just finish this exchange. Next thing they ask is, the prosecutor asks, is what was Celsius, a crypto lending desk, another total scam as we saw. The next frame, what are these? Notes from a conversation with Sam. I wrote, keep selling BTC if it's over 20K. Next sentence, prosecutor, you wrote FTX may raise. What does that mean? Ellison, Caroline responds, raise capital by selling equity to get more money to investors like MSB, the Saudi prince. So this is talking about selling new shares in FTX to raise the money to pay back the Alameda's loans, other loans that FTX had, as well as raise money to return customer deposits if there was anything left over. So we can see here this idea of keeping selling BTC if it's over 20K. The whole context for this is a crisis situation. It's a liquidity crisis for Alameda, where they are needing to repay $400–500 million worth of money to Genesis and other people who are asking for their open loans back. And so they're trying to raise money. One way to raise money is to sell new shares. Another way is to dump the assets that you have. And the first thing they did, of course, was just try to take all the fiat and everything they could from the FTX customer accounts. But to the extent they needed to perhaps pay off some of these loans in US dollars or other cryptocurrencies, this is the context for keep selling BTC if it's over 20K. And if you've ever worked on a trading desk, as I have, this is the kind of limit order that you will end up being given. And the reason for this, I'm sure what Sam was doing here is he was calculating they had a certain number of Bitcoin, and the only way they would be able to get themselves out of this mess is if they trickled it out into the market slowly enough that they got an average price of 20K, $20,000 per Bitcoin or higher. And we know this is true because this is the whole context of this conversation. It's a context about liquidity. It's a context about trying to raise money to pay off Alameda's creditors. There's nothing about manipulating the price in itself or for itself. This was not something that would have helped FTX at all. By the time FTX filed for bankruptcy and the creditors went in there and looked at their books, they had liabilities of 1.4 billion Bitcoin, and they had no Bitcoin left to cover it. There was no real BTC to pay off those liabilities. So for example, they owed customers $1.4 billion worth of Bitcoin, and they had no Bitcoin on the balance sheet. This is what happens if you play games with Bitcoin. And SBF was famous for this. He said Bitcoin had no future as a payments network, says FTX chief. Bitcoin responded by saying SBF has no future as a CEO and is going to go into jail. The problem with these kind of headlines are very misleading, that somehow they're trying to manipulate the price of Bitcoin. We can see this question from yesterday that inspired it. If SBF can control the price of Bitcoin, he supposedly kept it under 20K. Why wouldn't it be even more controlled when BlackRock and the rest of the big boys jump in? One thing that, another thing I forgot to mention is that one reason people were trying to redeem from FTX is because the price of Bitcoin was crashing. If Bitcoin had rallied, you would have had fewer redemptions from FTX, and it actually would have helped out Caroline's and SBF's situation. So he was definitely not trying to keep it under 20K. That was actually hurting him. What he was really trying to do was just raise liquidity to pay off all of the people who wanted their money back. And the second part of this question, if SBF can control the price of Bitcoin, which he clearly cannot, why wouldn't it be even more controlled when BlackRock and the rest of the big boys jump in? Which is a good question. We've talked about this a little bit before on the channel. Will BlackRock try to suppress the price of Bitcoin? And my answer is absolutely not, at least not in the first few years. They will be collecting a management fee for this Bitcoin spot ETF. They're a very profit-minded corporation. This management fee is going to be something like 50 or 60 basis points, in other words, about 0.5%. It's calculated based on assets under management. So they are incentivized to maximize assets under management and to do that in order to maximize management fees. How do you maximize assets under management? Try to get as many investors as possible to buy their spot Bitcoin ETF, and also try to keep the price of Bitcoin as high as possible, which will maximize assets under management, AUM, while encouraging fear of missing out, FOMO, in new investors. So the way the incentives actually work for this greedy Wall Street corporation is to pump Bitcoin and to keep the price high, at least for the first few years. As I said, BlackRock is a corporation driven by greed. And one of the great things about Bitcoin is we don't need to rely on charity and goodwill. We can rely on people's greed helping to spread Bitcoin adoption. Bitcoin will continue to harvest and be energized by people's greed to spread itself globally. Bitcoin price suppression, whether due to lots of sellers or attempted price manipulation, is always temporary. And it's a good thing because it allows people like you and me to buy Bitcoin on sale at a price below where it would otherwise trade if people weren't trying to play games to suppress it. As we saw, Sam Bankman-Fried, SBF, was just trying to get liquidity. He wasn't trying to suppress it, but he did have the inadvertent effect of keeping the price temporarily low because he was selling Bitcoin as fast as he could. Anyone who's short Bitcoin or plays games, though, eventually gets taken out on a stretcher due to its explosive upwards forces. We can see that on November 11, 2022, that's when FTX finally filed for bankruptcy, and that was the bottom in Bitcoin. So people have been stacking down here like you and me, got Bitcoin at a very, very nice price, and Bitcoin immediately, like a beach ball that's been pushed under the water, it mean reverted to where it's sort of, you can think of it, its non-FTX price, which today is around 26,000, 27,000. But what BlackRock's going to do is create huge, huge institutional demand and a way to satisfy that by buying their Bitcoin ETF. So this is not something to worry about. If you want to hear about all the different BlackRock attack vectors, I made many, many videos. You can go to my videos page or my homepage on YouTube, and right here with the search button, you can type in BlackRock and you'll see all the different videos that I made about the different scenarios that could happen. A BlackRock 51% attack, BlackRock creating paper Bitcoin, otherwise manipulating Bitcoin, buying all the Bitcoin miners, etc. I've covered this extensively, and this is a good research for a good place to do research. If, for example, you have other questions about Bitcoin, you could type in the word quantum, you could type in the word 51% attack, you could type in the word Ethereum, or whatever you're interested in learning about. If you enjoyed this video, be sure to hit that subscribe button, hit the like button, leave a comment, hit that notification bell if you want to be notified when I publish my next video, and let me know what you'd like me to cover in a future video in the comment section below. Thanks a lot for watching, and I'll see you in the next video.